Let's get your home loan rate down. We understand how important managing cash flow is for investors. That's why talking to one of our brokers can help you find the best loan options and a better rate. Your Finny loan expert will assess your loan and quickly spot a better option if it's out there. With access to over 70 lenders and a wide range of products, you're sure to get the lowest available rate in the market. Stop worrying about your repayments now and take charge of your financial freedom. Contact a Finny mortgage specialist today on 02 8866 2444 or visit our website at www.finny.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? It's Phil Tarrant. I'm a host of the Smart Property Investment Show. Welcome. Tuning in on the Property Investment Podcast Network and also across videos right across the internet, cyberspace, whatever you want to call it. It's good to have a lot of visibility and connectivity in property and property investment. It's something I spend most of my time talking about, working through, whether it's my own personal stuff as a property investor or it's chatting with people that help other people invest in property. It's a big part of what I do here, and long shall that continue. Need for it, education in this space continues to be key. One of the great benefits of the digitalisation of the economy and also the media is being able to be a lot more accessible to people around education. But there is still, in property investment, a lot of people just making the wrong decisions, and I see it time and time again. And there's no excuse now not to make smart property investment decisions, whether it's this podcast or some of the other very good podcasts that are out there. It's so much more accessible information around property investment. There's no reason why you shouldn't be informed. If you want to make the effort to be informed, get educated, shape your perception, shape your thinking, you can largely make the right property investment decisions. So it's my job on this show, and it's really the only independent sort of voice for property investors in Australia, is to get people in from all walks of life, from right across the ecosystem that is property investment, whether they work in property, they're accountants, they're lawyers, they're conveyancers, they're financial planners, they're mortgage brokers, they're buyers agents, or they're people who are investing in property, and get their stories, work out what's going on to help you make more informed decisions. That's what it's all about. And there's a handful of people that I sort of asked to come on as regular guests. One of them is Sam Gordon. He's a familiar voice on this podcast. He originally started coming on here as a young and humble property investor, and I'm happy to report that he's still a humble property investor, maybe not so young, but he's certainly humble. I actually gave him, and you can see it here, I've got a fancy can of pineapple water from Mount Franklin. So I find that I drink more water if it's flavoured, but I gave him a can of it and he didn't open it up. He went to the tap and filled up his water bottle, which looks pretty well used. So he's keeping lean. He's keeping to his roots. Hasn't got too fancy despite his success of his business, the Australian Property Scout. It's good to see. He's still accessible for a little while yet. Sam.
Phil, mate, thank you for having me back on.
That's good, mate.
Always a pleasure.
It is good. And to the point, we get you on every now and then. You've been coming on for years, right?
Mate, I feel old now.
Yeah.
Coming on that long.
You're still in pretty good nick, mate. I wouldn't worry too much about it. But how old's Australian Property Scout now?
Mate, we are just about to go into our 6th year.
Is that 6 years?
Yeah. So what are we now? November, in January. That's 5 years done and rolling into 6. So yeah, mate, it's been a long journey. Still loving it.
Yeah, God. How long are you going to go for? Forever?
Yeah, I don't really have a time to
until
stop.
the wheels fall off, which is probably your ticker, mate. You work too hard, but sometimes you have a contrarian view to other people. I've seen you debate people around the benefits of blue-collar property versus blue-chip property, and you're not scared to have an opinion, mate. So that makes for good commentary on the Smart Property Investment Show. Yeah. So I'm happy to bring you in and have a bit of a yarn about it. But, you've got a cohort of very passionate clients who, from what I see and outside sort of looking in, have really accelerated their investing career, and you get a lot of satisfaction out of it. So I'm sure we can bring some of your clients in. They'll tell you how great you are and what a great bloke you are and all that sort of stuff. But you also have, I spoke about some of the other good podcasts out there. You have your podcast, which again is called
Scouting Australia Podcast.
There you go.
Mate,
who would have thought?
Thanks for giving us a plug. Yeah, it's like good, mate. I enjoy it.
Yeah, so I'm a big boy. I don't mind,
sharing some love.
Sharing some love. And But, again, it's as we're a conduit of people for information. So you got a particular view that you have towards property. You have, the parameters in which you invest in. You never tell anyone where you're investing in property, which annoys me to no end, but I get it. But you see the world a particular way and you help your clients down a particular pathway. So, good on you.
Thanks, mate. Yeah, we definitely invest a little different compared to, like you said, a bit contrarian to everyone else. We've probably got a bit more of an aggressive approach in the way that we like to build portfolios. So mate, it appeals to some people, not to everyone, but that's all good, mate.
Well, one thing I have is a pretty extensive and expansive network in property, and I hear around the traps. I hear all the gossip.
Okay. Here we go.
I'm not a gossip, by the way, but everyone wants to talk to me about what other people are doing. But I hear in your shop at Australian Property Scout that you guys are sitting around talking about boom times ahead, fueled by some of the main drivers sort of shaping the economic and social direction of Australia, and that is immigration. Right?
Yeah.
It's going nuts right now, immigration. And from what I understand, observing the government and speaking to people in and around government, immigration is going to be, a key thrust for shaping the direction of Australia moving forward. Hey, that's not a new thing, by the way.
Yeah.
We're a nation of migrants.
100%.
We're a nation of migrants.
Yeah.
And I note also our First Nations people who have been here for a long, long time, great contributors to the economy. But we are a nation of migrants, and that will continue over time. Now, migration is always an issue which everyone in Australia has their opinions of, and I'm not going to get into the social impact and ramifications of that and some people's view to it. But what I do know is that immigration is a great driver of economic growth and capability for Australia, and I'm absolutely pro-migration. I think it's a great idea, driving sort of skilled migrants into Australia, and it is a focus of the government right now. There's a bit of catch-up going on because we sort of had that gap through the COVID, and some people are saying, migration is wrecking Australia, right? All the old xenophobic Australian views of it, they're taking our jobs, they're making housing more expensive. I can't rent anymore because there's no property available, et cetera, et cetera, et cetera. Now, property-related people look at this as an opportunity and they go, well, supply and demand, if there's less places available because more people want them, therefore there will be positive pressure on rental prices and also property prices. Now, we have a very favourable community tune into the Smart Property Investment Show who think that's probably a good thing. Other parts of Australia probably think that's a bad thing, where they just go, the housing system is stuffed in Australia, and it is a genuine issue. There's a lot of homelessness and people can't get investment properties or can't get rental properties. That's a big issue, right? And that government needs to sort that out, right?
Yeah, 100%.
But the issue is that some of those challenges and pressures are being exacerbated by the need for creating an economic tailwind by driving immigration. So be it. It's the way it is. Now, what does that mean for property? I hear, my spies inside of your organisation, that you guys are predicting boom times ahead, which is going to be migration-led. Yeah. That's a really good rap, right?
That is.
That's good. Maybe I can freestyle anyway. But
yeah, mate, look, we definitely have. It's funny, you talk about the insider. You just called me and go, mate, what's going on? What are you seeing? What's happening? And we were having a bit of a chat about it, and you go, mate, I think that's worth an episode. So
yeah, it makes me nervous that these but look, this is what buyers agents do. They look 100%. At all the different macro and micro economic factors which are shaping the direction of property, from which you go, okay, this is our read on it, from which you go, this is where we should be buying.
Yeah, 100%. I think a lot of people, when they especially have heard me in the past, they think I'm all about buying below market and forcing value through renovations and everything. Not everyone kind of picks me to be a data nerd or someone that really likes to go through all the data with our team, or a small number in our team that we go through all this as well. And we literally got 2 property economists in the team, like a lot of very intelligent people that we work with internally. And we pretty much sit down, have big sessions and powwow this thing out, go through all the numbers, go through all the data and figure out where we think. And we've done really well out of it. This used to just be me a few years ago, but now and we're doing very well out of it, picking markets kind of before they're going as well. So it's been really, really interesting to watch and kind of unpack. But we were doing a session about this other day, and I think this is where we got onto this topic, really around the current migration numbers that are coming in, both from external and obviously internal, what's happening, and then tracking where they're moving within Australia as well, both internal migration and where those international migrants are coming to as well. And just layering a lot of different, formulas and a lot of different different factors and data points on top of that as well to really see what's coming. And yeah, man, like we kind of talk about boom times, but like within APS, we're looking at a lot of these locations and going, we can see a super boom coming, like a bigger than average boom coming for a multitude of reasons.
A super boom.
Super boom.
Is that like a super moon?
Man, we
bigger
started,
than normal.
I said it and we all just started going super boom, super boom. We're just pissing ourselves. Mate, I do. There's a lot of things and I know we're going to unpack a bit of it today.
Yeah.
But a lot of things that are like predicating markets moving into boom, but then what's going to happen kind of at the tail end of those. And that's where I literally think we're almost moving into a perfect storm with some of these locations. As some of the immediate factors kind of tail off, there's going to be other factors that kick in on the back end of it, which I think are going to keep pushing it harder and harder.
Okay, so I need some definitions.
Okay.
So I'm not a smart guy.
Okay.
What is a boom?
So a boom in my mind, when I look at a market, you look at a boom, like if you look at the long-term trajectory, first we'll kind of start, markets typically...
What's normal?
So a market, normal market conditions where a market's not moving, it's not doing anything. It's not going up, it's not going down. If you look at, say, Sydney in 2003 to 2013, it was stagnant for that whole period. But then in 2013 to 2017, it boomed. Most of Sydney doubled in that 4-year window, 3.5 to 4-year window. Now, some markets did 60, 70, 80%, and then other markets did 110, 120%. So picking the areas that grew further, obviously you could make an extra 40%.
I had a lot of them in Mount Druitt, by the way, back in the day.
And what did they grow?
200%.
There you
a lot
go.
of them.
Yeah.
Good vine. Right time, right place, right?
100%.
Okay, so that was super. Okay, so real estate in Australia, long-term averages, it grows at about 6% a year, thereabouts, 5 to 6%.
Yeah.
Call it that. So a boom is when it grows faster than that.
So talking about contrary to popular belief on the way that people assess things, I don't look at like 5, 6, 7% per annum average annual growth. What I look at is the fact that most areas will flatline for 10, 12, some 15 years, and then they double in a 3 to 4 year window. I'm not all about time in the market. Let's take 30 years to retire. I'm about where can I double my money in? Where can I position myself and then double my money in the next 3 to 5 years?
Yep. Okay, so how do you create the greatest capital growth in the shortest period of time?
100%.
That's what you're okay, that's fine.
I'm a poor rabbit farmer, mate. I can't wait 30
mate,
years.
You can only trade off in that for so long, mate. I had dinner with you the other night, and that certainly wasn't rabbit farmer food.
It was good stuff. That was good stuff.
Gosh, I didn't know you could buy steaks that expensive personally. You know, I'm a... Anyway, we won't go there. But okay, so all right, that's good. So that gives a bit of an insight into how you guys see the world and your investment philosophy, right?
Yes.
You know, because other people will be like, well, let's just trade on the averages. It's like taking an ETF on the ASX, right? That's a nice safe play. It's going to give me sort of, which is okay. At different points in your investing career, you probably want different strategies. But what you're about is like, where do I put my money now to get the biggest uplift as quickly as possible?
100%.
Yeah. So you chase booms, but people hate the notion of booms. Like, you shouldn't chase booms.
Well, you know what the other thing, mate? I hate people that sit there and wait for 5, 6, 7% per annum average growth, because what they're doing is they're looking at past history of what a market's done. I shouldn't say I hate people. What I mean is I hate the style of investing.
You know, here first, Sam Gordon. Go see the headline.
I hate the style of investing of, a market's done. It's got a 12 to 10, 12, 15% or 7% average annual growth over the last 10 years. I don't want to buy there. It's already seen its growth. Why would you buy in a location that's already had significant growth in the last 10 years? I prefer to position myself in a more affordable market at the bottom of a cycle. It's got more room for upside in a short window, because that's where I'm going to make that great return on my money. So it's just like a different investing philosophy. It's worked really well for me. I know you're laughing about this a second ago, but I did come from extremely humble beginnings with that. I started with a very small amount of money on a very low income, and I learned that that was how I had to work my money to actually be able to keep moving forward. Yeah. And that's what we see. We attract clients that are in that same mindset.
And that's fair enough, right? To be fair, when I started investing in property, I was, some people would say it was counter-cyclical investing or contrarian investing, where I went heavy in the western suburbs of Sydney, which, by the way, I was comfortable investing because that's where I grew up, right? Like walking the streets and like it looks a bit dodgy. I go, what a great place to invest, right? And I bought a lot of property in the western suburbs of Sydney at that point in time, and I did really, really well. I haven't invested in western suburbs of Sydney for a long time,
exactly.
Because it hasn't been the right place for me to invest. So,
it's done its thing.
And back at that point, we're buying places, I don't know, for 200 something grand for a house, right? Wish I bought 50 of them if I had my time again. I didn't, but I could have. I might not have bought 50 of them, but I could have bought a lot more than what I did. But, back when I was doing that, people were going, why are you buying this dodgy properties out in the western suburbs of Sydney? So that was the right time to invest. And I had a very good buyer's agent at the time. You know who they are.
Yep.
And a lot of people go, well, no, don't buy that, don't buy that, don't buy that, don't do it. Done well out of it. So that's all you're doing, the same sort of stuff.
Yeah.
Buying the right stuff at the right time, affordable properties at the right place, right time, looking for that exponential growth.
Yeah.
That's what we got.
The one thing on your point just there, right? Like the majority of people, probably 99% of people, if you told them where you were buying, if they were from Sydney, they would have said, mate, why are you doing that? You shouldn't be doing that, all the rest of it.
Yeah.
There's an old saying, like, if you invest with, if you, whatever it is, if you follow the sheep, you're going to get the same result as the herd or whatever. You got to go against it to get the different results. And most people would think, don't go buy there. Don't buy somewhere that hasn't grown in 10 years and it's, terrible area, bad stigma. But that's where you can negotiate. It's got the worst stigma, so you can negotiate harder. You're buying in at the bottom, you're buying in lower and lower. And so the return percentage is so much higher because when the market turns, no one cares about stigma of an area when a market turns. They want to get in on the growth. So if you can get in, you can beat that, especially before that turns and before that happens.
So what you're saying then is that you're looking at some of the economic factors which will fuel ongoing property price growth. One of them is migration. There's some other factors as well. But my point is, are there places like that 10, sort of 12, 15 years ago in the western suburbs of Sydney where if you got in there at the right time, you build a portfolio well. Do they still exist today?
There is a small number still left that haven't had growth. So, but the one thing I'll say is just because some areas have had a little bit of growth, like even if we talk 30 to 40%, which might seem like a lot, but if you're talking 2 years and they've had 40% growth, but they haven't grown for 15 years. But if all the other factors, and that's why I think we'll dive into this in a second in terms of the migration and the undersupply and all the rest of it. But if you look at all the rest of it, you look at your case in point there, you had an area, and I had areas as well in Sydney that did 200%, that quadrupled, in a 10-year time frame. And so if you're looking at only because it's had 40%, I'm not going to touch it. And I made that mistake when I was younger as well. But if that area has got the potential to do 100+% growth, why would you leave that extra bit on the table? So there are definitely still locations left that are right at the start and right at the bottom point. There aren't as many of them left, but then there are plenty of other locations that are out there that have maybe just moved just past the bottom, but they've still got a lot of movement, a lot of potential for growth as well.
Yeah, you don't always need to buy right at the bottom.
No,
it's okay if you're buying on the way up.
100%.
Even buying on the way down, knowing the bottom's not far away, is not bad thing to do either. But let's talk about market dynamics a little bit more. But just go to a quick break. Stay with us, everyone. Back in a moment. Welcome back. Phil Tarrant for Smart Property Investment with Sam Gordon from Australian Property Scout. Well, are you the founder or director or CEO or managing director or
everything?
Just the guy.
Everything.
The guy.
Mate. Director, mate. I just call myself director and head buyers agent. That's what I call myself.
Head buyers, HB. Head buyers.
HBA.
Yes, HBO. Good channel, that. HBO.
It is a good channel.
Head buyers organised anyway. How many buyers agents you got in the crew now?
Mate, we're actually sitting at 6.
Okay.
Six
BAs.
BAs.
That's a bad crew.
Yeah, it's actually really good.
Yeah.
It's really good, mate. We've got a really good dynamic in the team now. I kind of train everyone. I do very intensive training when they first start, and then we do training twice a week as well.
Yeah.
So,
and they're all investors who just go, I want this to be a career.
Yeah.
It's such a pathway, right?
Man. 100%.
Like,
and
everyone done it.
Yeah, and so like the guys that I kind of tried that kind of had like past buyer's agent experience, but they weren't investors, they didn't work out because they didn't think they're like kind of on the same level.
I don't know how you can be a buyer's agent for property investors.
Yeah.
The owner-occupier may be a bit different, right? Without being an investor yourself.
You can't.
You can't do it.
No.
It's just so, why aren't you doing it yourself? Oh, well, I put my money in, So they're all right across Australia.
Yep.
Yeah. So is there anywhere where you're not buying at the moment?
Yeah, at the moment.
So these are the questions I've got to ask him these days because he never gives me anything. So I'll flip it around. Where aren't you buying?
The two places we aren't buying as of right now, we're not buying in Vic and New South Wales.
You're not buying?
No.
Okay.
No, at the moment, yields are too low. Affordability is too low. So again, this is another one of the market dynamics we'll jump into in a second. But affordability is too low. And I don't think it has the same propensity for growth. It could still have a little bit, but is it going to have as much as some of the other locations that we're really bullish on as well? So I don't think they will.
Okay, so where you are, just give me a sense of it. You're not going to give me too much information. Very good at that.
So there's Australia.
Yeah.
And you take out Vic and New South Wales and just have a look elsewhere.
Okay, let's go. Regional or metropolitan?
Both.
Houses or units?
Houses.
Distressed assets versus properties that don't need a lot of work?
Both.
So that same question would be place you can manufacture equity in or just set and forget.
Yeah. It always depends on the deal.
Yeah.
So you might get a distressed seller that's in a 5-year-old, 10-year-old home, and you just get a great deal. Or you might get something that's a bit older. Same thing. You might look for, still getting a bit of a discount because they're distressed, but then we can force a bit of extra value through renovation or something as well. So we still do a lot of renos. Yeah. We're big advocates. We've got project managers within the team that handle it for clients as well. So we're big about manufacturing equity, manufacturing cash flow.
Yeah. You get much distressed stock coming down the line?
The last 6 to 12 months, there's been not heaps, but there definitely has been a big pickup. So you look at like 21, 22, almost nothing. And then kind of at the start of this year, it's really started. So 2020 was a big year for it, massive COVID, deals I was getting then were crazy. But then, this year it's definitely started picking back up. People, especially people who bought last year, so they kind of bought in almost at a peak, but then interest rates kept climbing and they couldn't afford that side of things.
So they're mainly distressed for the purpose of they can't afford interest. Rates on that.
Yeah, it's the biggest one.
So it's not like all the usual stuff like death and divorce and.
Oh, mate, you always still get that stuff. Yeah. So I mean, that never changes. Obviously, that's just part of life. It's a life cycle thing, right? But normally, when it comes to distress from a monetary perspective, it's normally interest rate related. So if you look at 21 and 22, interest rates are still pretty low, even though in 22 they went on their run. But it takes time to set in. I remember one of the young boys in the team asked me, he goes, mate, if all this interest rate stuff, if it was all rising, why aren't we seeing it already? I was going, mate, because it hasn't set in yet. All right, rates at this time we might have been up 2%, 2.5%. We're only sitting at 4.5%, 5%, maybe 5% interest rate at the time, but it hadn't fully set in yet. It obviously takes time once those interest rates have been set. Hence why we've kind of sat stagnant for a while since the RBA's kind of stopped doing their raises now, because they're kind of letting that take its effect on the economy. And it doesn't happen straight away.
It doesn't, and that's one of the biggest issues with when they start tinkering with interest rates and whether or not we're at the end of this rate cycle, to be played out. But I read a thing just prior to the last interest rate announcement, which was on Melbourne Cup Day, that Westpac Bank said that they had $57 billion of money sitting in offset accounts.
Yeah, right.
That's Westpac.
Interesting.
So pretty much saying it, and their point, prior to that rate announcement was Australian borrowers can cop a little bit more. Pretty much
they've
was,
got a bit
was
in the
their
kitty.
point. So,
they got the buffer.
And that's not a bad thing that and I think Australia's LVR of debt versus the value of loans is about 22 or 25% somewhere or other.
Yeah. Because there's so many olders.
There's so many people own their place outright.
Exactly.
So we're not leveraged too much as a nation. But anyway, we're getting away with it. If we looked at the
nation as an entire portfolio, I've never heard that before. It's a good one.
Yeah. It's around that. So 20-something percent is our LVR.
That's
right?
cool.
Which gives some sense, and we're talking about distressed assets really quickly, but to give some sense to the inherent distressed nature of Australian real estate. If only 20-something% of it is financed, it's pretty bloody stable.
Yeah.
A lot's got to go wrong for that to wobble, right? And this gives some sense of the inherent value of real estate and why it's always got these long-term growth and all this sort of stuff.
Yeah.
But talk to me about the market now then. What are you, so we're talking about this economic tailwind, which will be migration, but the consequence for property. But what else is shaking things up at the moment?
So there's a few different factors. If we put migration onto the table, just to kind of discuss those numbers, right? The biggest level we'd ever seen pre-COVID was, I think, 240,000, right? The average is around about 180 to 220,000 people a year in terms of increase in population, right? And the 12 months until, this was in March this year, it's increased since then, but to March this year, it was 454,000, I think it was, 454,000 international migration plus internal migration as well, like population growth. It was around about 560,000 increase in population.
Was it that much? I don't have to rely on your numbers. I don't know.
To March, to March was 454,000 in terms of international, and they've been ramping it since then. So you put that into the equation where this all kind of starts as well from COVID, because in COVID, we actually had this chat, mate. I remember because I referred this to people when they say, mate, what do you know? And I go, well, once when COVID first hit, I was in my little fibro shack down the coast with Phil, and he said, what are you predicting is going to happen with the market? And I said, I think everyone that needs to sell will sell, and they'll sell at a loss. Everyone that doesn't need to sell because the market's so uncertain, they'll pull it off. And the next 3-4 months is going to be a bloodbath, which it was, and there's going to be no stock. And when there's no stock, the market's going to go crazy because the people who still want to buy are going to buy, and there's not going to be much there to play with. And then when the market starts to run, everyone's going to try and jump on and get in on it.
Yeah.
Stock hasn't increased since then. It hasn't improved since then. In some areas it has a little bit, but realistically, we've been in a serious stock shortage since the start of COVID. And now we're coming into this point where now build prices have been on this ridiculous run, this crazy, crazy run. I say ridiculous, it's just been on a crazy run because from a builder's perspective, all the cost of labor has been going crazy. There's been a massive labor shortage. That's people out there, builders and chippies and plumbers and all the rest of stuff. And they've all been pushing their prices up. Cost of materials has gone through the roof. Then the war in bloody Ukraine put a massive dampener on how much actual available material could get with a lot of different things.
Yeah.
So then prices just again went crazy. And so we've just gone through this piece where now build prices have gone so crazy, it's actually unviable a lot of the time to build projects and they can't get valuations to finish them. So we've got this we're almost triple the population growth that we've ever seen before in the nation and growing, and we're not building anywhere near as many homes as we used to build. There's only one thing that turns into. And in my opinion, that's probably not going to drive into what I believe is going to be the super boom. But that's where I think we're going to get 2 or 3 really, really good years of run in affordable areas that aren't at the top of their market yet. So if you look at your Sydney's...
So you're talking about places where migrants usually go to live.
Mate, it's a mix. It's been a huge dynamic change. If you look at where most migrants go to live is normally say your Sydney or Melbourne, right? And that's propping up those markets. But what we're seeing is a huge amount of people shifting away from those markets and going, WA is actually the highest increase in state to that time as well in terms of population growth. Brizzy and Vic are actually behind it. Sydney's down. So when you throw all these things into the equation, you're looking at, okay, well where are these regions in these cities that are getting the most population growth from that perspective, and where is in the biggest deficit in terms of housing? That's your predicator to a boom. If you throw on top of it the infrastructure spending, you look at Brizzy with the Olympics coming in as well, if you throw in a massive stock shortage, massive rental shortage, and then obviously the population growth on top, but then exacerbate that into all these different regions and locations, there's no way this thing doesn't run. And we've seen it turning. It has been running. This year, Brizzy picked back up. I had a slow year last year, but it's picked back up and it's on a serious, decent trajectory now as well. But you're looking, there's a lot of other locations that are actually on an even far superior trajectory, even in my opinion, to Brizzy right now too.
Yeah, and you sit there just going, that's a big problem. Well,
big problem.
It's a big problem if you're a renter.
Yeah.
Whether you're looking for rental or you currently have a rental.
Yeah.
That you rent. Which means that your rent's got to get more expensive. And there's been a huge amount of pushback, and getting involved in manipulating market dynamics through legislation. And what I'm talking to there is states which are, regulating how quickly you can increase your rents, right?
Yeah.
It's – and you see the pushback happening, and to get political for one moment, there's not enough – stock available for people to rent. So they're trying to make it cheaper by telling landlords not to put rents up.
Yeah.
That's.
But at the same time, interest rates have done over 4%.
4% growth, right? So the government's got its cap in hand saying more. Now, the state governments I'm talking about here for a moment, make the most of their money to provide services to the state through real estate transactions.
Yep.
Right? Land tax and stamp duty. So they need properties to transact.
Yes.
Right? People don't sell properties, if they don't need to.
Yeah.
And if they're able to get good rents on stuff, they'll start
hang on.
They'll hang on,
yeah,
right?
Yeah.
And which or it turns into owner occupied stock, which even exacerbates further access to rental shortage, right? So you sit there and you just go, okay, that's at a state level. Then at a federal level, driving economic growth through immigration, great. We need to get the unemployment rate. It sounds mad, but it needs to be higher than what it is.
Yeah.
We need less people. We need more people that need jobs that are unemployed, right? And that's what we're trying to drive with migration. So we need to make sure the stock is available, But you have this regulatory environment at a local government. They're trying to change it of just red tape around building stuff, but no one wants to build anything anyway because it's too expensive, and you can't make a buck out of it.
Yeah,
they're starting to relax a little bit. Multiple dwellings now, like granny flats and stuff, that makes sense for infill. That will help a little bit to the dire situation of housing stock. But you sit there and you would say, The economic growth of Australia is critical for ensuring the prosperity of the nation moving forward. That's a good thing. Australia's at the right place at the right time in Asia to drive and accelerate its growth at its full. But we're already punch above our weight at the GDP level, right? And it's a great place for people to build businesses and raise families, and it's safe and secure and all this sort of stuff, right? So you would think that solving this property problem would be a primary objective and priority for local, state and federal budgets, federal governments.
Yeah.
I don't think it's a priority. They just form committees to talk about it, but nothing ever happens.
The biggest thing is the other massive thing that I see is they're bringing in trades, which they need to do, right? They're bringing in skilled labor to then be able to replenish the workforce. Yeah, I know you've probably heard this many times as well, especially during COVID and even in the tail end. A lot of cafes and restaurants closed because it was just too expensive to try. Yeah, it was either they couldn't get them or it was too expensive to try and hire people. Yeah. So they're bringing more and more people in, right? From all perspectives, all industries trying to replenish the workforce. The biggest issue is they're bringing in more people to try and replenish the workforce to keep everything ticking over and doing its thing, but then they're putting this huge stress on the housing market and on the rental market. And obviously that's what's driving vacancy rates so low, which again, further to your point, if you're in these areas where you can't raise rents, it's not a great place to be. If you're trying to hold something at a higher amount, potentially the demand's there, but then you can't even raise it.
But property investors just get hit everywhere as the sucker for supporting everywhere you go. Like they're stopping, short-term rental accommodations in places like Byron Bay. No, can't do that no more.
Yeah.
No, we need more houses for people that want to live there. Well, it's sort of it's influencing market dynamics,
100%.
right? You just, I don't know, something's got to change. And put it in this context, right? Like in 1930, right, we built a massive bridge, right, across the Sydney Harbour, which was way too big for what we needed. Way too big for what we needed right there. It was ridiculous. Yeah. It was a comedy bridge, right? Like going, look at this thing, right? There's a couple of cars driving over it, right? It's full now. Nearly 100 years later. Yeah. Today we build tunnels which service the needs of what we have today, not into the future, right? Madness, right? Oh yeah, we'll put it up, fix it later on, whatever else. The property infrastructure we're creating in Australia for Australians to live isn't enough for what we have now, if not probably 10 years ago. So why aren't we taking a Harbour Bridge mindset today for solving the property issues in Australia, which we're able to do 100 years ago? We're just trying to fix it around the edges and tinker and whatnot. Now, the good news is if you're a property investor, the supply and demand equation is in your favour, and certain people won't like that, but that's a reality. The 1 in 8 Australians that have an investment property, you're probably backing the right horse.
100%. This is the thing, like you're saying, they should be trying to fix this thing, and they try and bring in all these different schemes, but none of it realistically is going to work. There is no fix in my opinion, next 3, potentially 5 years to solve the housing shortage, right? Like in terms of, essentially the housing crisis, both from a rental and from a sales perspective, especially if they're driving immigration as hard as they do. And if that keeps compounding, gets bigger and bigger each year, we're going to be in a serious, serious deficit. And that's going to be great for property investors, right? Which is obviously what we're talking about here. I think if we flow on for a second in terms of how do we see this turning into from a super boom perspective as well, and why do I think it's going to go beyond the averages?
You haven't told me what a super boom is yet. How big is a super boom?
Okay, so your standard growth rates, in my opinion, when a market goes through its standard boom, it's kind of like your averages in Sydney were probably 70 to 100 or 110 or whatever.
Over what time frame?
Just during its boom, which could be 3 to 4 years, something like that, through that standard boom cycle, right? Yeah. What I see is these things extending into super boom. So they grow for longer than ordinarily expected. And some of these locations, I personally believe, will do over 150% growth. Yeah. And the reason for it...
Some of these locations, which you won't tell me where they are.
No.
Yeah.
But the reason why, right? Because normally I'm normally a reasonably conservative person, especially when we're talking about different things. I try and... with some things, right? But with it, the way I look at this thing happening is we've got all the predicators like super tight supply and depleting, not increasing, migration going absolutely through the roof and being at an unmanageable level. And then you've got a huge amount of infrastructure projects and a lot of money flowing into the economy as well. And over the next few years, obviously they're going to keep, or it could be, it's a hard one to call exactly in terms of when we might see rates coming back down. So they're going to keep them a bit higher, but a lot of markets are going to keep growing during that time frame, right? But during that time frame where they're going to be growing, there's a lot of people that, like a lot of Australians, sitting on the sideline going, no, interest rates are too high. I'm not going to get into the market now. I'm not going to buy my primary residence. I'm not going to go and invest. I'm going to sit on the sidelines.
They're the people not tuning into this podcast.
Yeah. Uneducated, right? Like it's a hard thing to say, maybe, but realistically,
not as informed as others.
That's a much nicer way of putting it, Phil.
Not as informed as others.
But what I'm getting at here is over these 2 to 3 years, there are going to be a lot of investors that are well informed listening to, say, your SBIs and your Scouting Australia podcasts and whatnot. Here we go. Tune in, guys. And I think a lot of those guys are going to make great money. What I see happening on the back end of that is what typically happens 2 to 3 years after migration, heavy migration. Those guys who were renting now have their permanent residency and now they're trying to buy.
Great Australian dream.
Exactly. They're finding where they want to live. And this is going to happen because you've got to remember, if they're going to push this really hard for 4 years, it was probably going to start in around about 2 to 3 years time. Yeah. Those guys are going to start transitioning in. That's going to run for 4 years of people then transitioning into the housing market.
Yeah.
At the same time that interest rates start getting pulled back, and all the other, call it 80 to 90% of investors that aren't as well informed as our listeners, then they all go, okay, well, I got a bit of confidence now because interest rates are a bit lower. And I got FOMO because I've just seen the market boom for the last 3 years.
Yeah, and I'll give you a hot tip which exacerbates all that. Is that our migrant communities often come from very different backgrounds to what it's like to live in Australia. Yeah. And the fact that they go, you know what, I'm going to pull up stumps wherever I am, and we might have economic migrants, we might have migrants who are escaping conflict or areas of disruption. We might have our standard migrants like, your Poms and your Kiwis and stuff coming in, right? Their mindset is the fuel for the investors of tomorrow.
Yeah.
They're willing to give it a crack. And once they arrive here and they go, oh, this is a pretty good place to live, point number one. Yep. Point number two, it's safe and secure.
Yep.
Point number three, I've got so much opportunity.
Yep.
I can go for it.
Good jobs.
Point number four, there's this thing called negative gearing.
Oh, no.
Right? And there's this other point, which is, banks are happy to lend, and they just go, what? Hang on a sec. So I can buy a family home and raise a family and stuff. But you find, and you see it, and I speak to many, many people, many different property investors, the migrant community, and I'm talking not immediate migrants, I'm talking, 10, 20 years.
Yeah.
They're massive property investors.
100%.
Because they just go, I can do that.
Yeah. And they can build that wealth.
And they've got a mindset where they'll give it a crack.
100%.
They're not blinkered. They don't have these preconceived ideas of what they should be doing.
Yep.
They give it a red hot crack. So this is this iterative process of generational migrants who fuel the next round of property price growth. And look, I don't know the numbers as well as you do, and I'm not going to say it's a boom or a super boom because that's not my thing, right? Like, I'm not in the business of doing that sort of stuff. That's you saying that. But you'd have to admit that things look reasonable. I would say they look pretty positive for that. Now, I was chatting about what the government's doing, right? Like, don't get me wrong, and I speak to people in and around government, like it's a big deal, and they're sitting there trying to work it out, right? It's hard. Like I say, it is hard, right? And then they've got to balance a ledger of
it's an unsolvable solution.
It's an unsolvable solution.
They don't have enough trades. They don't have enough product material. They can't build as many homes. They cannot get anywhere near it. And realistically, the best way to fund it is through private investors and whatnot going out and doing it.
They incentivize investors to go and provide 90% of all rental stock, right? But you see stuff, they go, well, just release more land, right? They go, just release more land. Sydney is pretty much at the end of its tether, right? Like I saw a big thing about around Windsor. They changed all the sort of floodplain zoning and stuff, and all the stuff that they're going to release for house and land.
Yeah,
they're going, nah.
Flood affected.
Can't do it. It's too risky. It's too risky. Can't do it.
Yeah, right.
And they're just going, nah, we're shelving that. So all these people are probably going, I'm sitting on a fortune here. I've got nothing, right? So there's not that much land still available. There's some greenfield sites and there's continuing to expand, but the red tape to actually develop.
That's what I was about to say. Like, mate, even if there was, and they go, no worries, you can approve this now, they rezone it. It takes 2 years to get through council, 2 years to chop it up, and then you got to sell it all off and then build it.
And then you got to build it, right? It's a 10-year process.
100%.
And then they'll find some frog that, no one knew about it. I go, no more, right? And this is the balance, right?
Yeah.
And you've got to have ecological sort of
Awareness as well.
mindset,
Yeah,
awareness.
yeah, of
I'm
course.
not saying just bulldoze everything and build stuff, right? So you've got to have that sensibility to balance green space and amenities and all this sort of stuff, livability with a price growth. But to actually get something through council needs so many people to sign it off. Like, it's the onerous nature of it just stifles decision making and therefore compounds all the reasons why we're not able to build more houses than what we need.
Yeah.
Comes back to, supply and demand. It's the basic tenets of property investment.
Yeah.
But you got to find the right spot. So let's have a chat about that. Let's go to another break. Stay with us. Back in a moment. Welcome back. Phil Tarrant for Smart Property Investment with Sam Gordon. Now, I like the government, by the way.
That's good.
I know many, many people in government. I think people that choose a career in the public service are a great enabler for Australia. Whether the government's too big or small, I don't know. It's not my thing, but something needs to happen to get more Australians into properties, renters or owner occupiers and stuff, and they will work that out. And I reckon as we enter the next election cycle, my hot tip will be that will probably be one of the major headline grabbers
100%.
around, because it's such an emotive, it's such a visceral aspect of Australian life.
Yeah,
is
100%.
that you got a home, right? And when you see people living in cars and these professionals who can't get a home to live in, like, man, it's bad, right? It's bad. But the point is, for property investors, if you want to get in the game, get in the game. And you need to have the comfort and confidence that property as an asset class resonates for you. Now you've had a good argument why it's a good thing to do, and you see this super boom moving forward. But you're forward. But your point, not all of Australia will super boom. There'll be components and aspects of Australia. So what, without giving me locations, what constitutes good asset selection in the environment of a potential super boom in property prices? You've got to give us something.
Yeah, man, I'll give you a few things. Like, I think one of the biggest things to look at, if we're kind of ruling out why reasons not as well, right? So like why, like in my opinion, with how much Sydney, especially Sydney in particular, had in terms of growth, what's kept it from having, it had a bit of a dip in 22, but it's kind of held itself a bit firm, and some areas have actually risen up a little bit in 23, right? Literally against all logic really within that. But the logic, or what really that comes down to, is the fact that there hasn't been enough supply and not enough people have been coming to market for it to drop. And that probably goes back to your point from earlier. There aren't as many stressed people with mortgages that really need to take all that much back. So I think that will kind of hold that steady and probably, bubble away, doing its thing, probably it and Vic for the next couple of years. But if you look outside of that, really, like, the other thing to layer on top of this is where's there going to be a lot of infrastructure spending? Because when there's a lot of infrastructure spending, you probably get a lot of people moving there, even like your migrants coming in from a labour perspective, and the economic vibrancy that picks up in areas that have a lot of, big infrastructure projects going on as well.
So you're saying chase the infrastructure projects?
It's a mix, right? So the infrastructure projects are one. There's just so many layers in terms of these things that keep pushing it on as well. Like, lifestyle's a big one these days too. After COVID, most people don't want to work the 9 to 5 or the bloody 8 till 6 at night in the city, and those sorts of things as well. So there's a lot of other drivers from a lifestyle perspective, depending on where you are location wise, that are also going to drive some markets and give them an extra kick. Yeah. If you throw on top the affordability, and I think the affordability is going to be the really big one, especially like with a lot of migrants moving into the country. What are they looking for? Looking for somewhere they can work and that they can actually afford to live, not somewhere that they're, up to the bloody neck in rent or whatever to try and survive. They want to live and be able to enjoy life as well. So affordability has always got a huge factor. It's even when you look at Sydney, when Sydney went crazy from 2013 to where we are now. At the start in 2013, looking at it properly, it actually was an extremely affordable location at that time. It's like all the places you went and bought out in Mount Druitt. I bought a lot down south as well.
Proper mortgage belt stuff.
Man, 100%. And they had so much room to move because they were so affordable. And then as prices went up, a lot of people from the next brackets, they all had to kind of start downgrading in terms of what they could afford to buy because prices went so far. And so when you kind of look at this stuff and it keeps compounding from that perspective, applying that, especially from the affordability perspective and understanding an affordability perspective of an area as well, not just it's cheap, but is it affordable for this region, this location, this city, understanding all those metrics and the incomes, in those areas as well. There's a lot of different things to kind of layer on this thing to get it right as well. So it's going to be very, very interesting. I think it's going to be a mix between your metro locations and quite a few strong regional centers as well. There's some huge infrastructure projects going on. There's some huge, even you'd probably notice from defense relocations and a lot of different things that are like relocating and really putting additional pressure on a lot of different housing markets. Those things don't get solved quickly.
Are you buying a townsville?
What's that? Adelaide? This is what I'm talking about. There's a lot of different things here that are at play and in play across a lot of different markets and whatnot, man. You know what I mean? There's so many things going on. And that's why I'm saying it's not just one location or two locations or this is the hotspot. There is so many locations once you drill down, you have a good look at that actually tick the boxes across the board for these things to be correct.
So when you talk of locations, do you talk LGA, so local government areas, or do you talk suburbs, or you talk subsections of suburbs? Or I think of postcodes, right? There could be 4 or 5, 10 suburbs inside of one postcode. So you get right down the suburban street level.
Yeah, 100%. The interesting thing to know, and you'll probably agree with me on this, a lot of people...
We don't agree on anything.
A lot of people would disagree, right? And I wouldn't put a client into this, but I have like the amount of locations you'll drill down and then you'll find an area, maybe not in like a full housing commission street, right? But let's say there's a pocket that's a little bit higher in housing commission. And I say, and by the way, I'm not advocating people should go out and do this. I'm not advocating that we do this for clients, but you probably did this when you're out in the Druitt, and I've done this in certain locations. I did this up in Ipswich. There was an area, a lot of people probably know, the suburb called Goodna. Yeah. And I went and bought a couple that were in what were considered really dodgy pockets.
Goodna's been a good place to invest.
Mate, I bought in 2019 and 2020, and like talk about a super boom. There were a lot of locations like in that area. Yeah. Your weatherboard sort of style houses, 250 to 300,000. I bought a few. This is for myself. So I'm saying I don't do this notoriously for clients, but then I bought a couple of deals sub 200,000. Mate, they're worth 500 grand now. 450, 500,000. I've owned them for 3-4 years. Yeah. You know what I mean? Like and this is where we drill down to the suburb level, then we drill down to a street level, and you find opportunities, and not so much that, right? Like I said, I wouldn't put clients into that, but like where can you find that is like it's maybe bordering like the quite exclusive areas or very nice parts of a suburb, but you can still get it for quite a discounted rate compared to that.
And Ipswich is a really good example because people think Ipswich, they go, oh, it's just Ipswich. I've been Ipswich.
It's huge.
It's a massive place, right?
It starts 20 minutes out from Brizzy CBD.
Yeah, it's so many different types of suburbs within it. And the western suburbs of Sydney is very much like that. I remember driving around, looking at play, and I know the area pretty well, but like, you go from like, your Mount Druitt to your Tregear to like your Emerton, and all those suburbs are different. Yeah. You have certain streets which are a lot of housing commission on it, and then the next street, the next suburb is all like really nice owner occupied. So I'm not saying that housing commission isn't nice. Yeah. But it changes so quickly. Yeah. It can change in a matter of hundreds of meters. Yeah. And that could be all the difference between buying stock at a certain level. Yeah. Like you got to be discerning.
100%.
But a lot of these areas also is the government selling off, housing commission stock, right? I've got had some.
That was some of the stuff that I bought up there. Yeah, was literally that. They cleared it all out.
That's great, because and this is the part of the logics of certain local and state governments is to have more sort of blended areas rather than
clusters,
right? And that's all cool. Yeah. That's how it works in England, right? So there is some diamonds in the rough, but you really need to know what you're doing. But Ipswich is a good point. I don't know if you're still buying there or not, but certain parts of Ipswich is fancy, right? Yeah. And fancy being, just good bread and butter, mum and dad type owner-occupied stuff. Yeah. But mate, get stuck in,
This is what I was saying, like just to flow on from that conversation we were talking about. When you understand that and you get on the ground, which we always do. We always go there, we get on the ground. We like to understand it from that super intimate level and perspective from that. And then when you find those little pockets that are like in between, you know what I mean? Because when the market takes off, the average investor, they don't understand that. And so they'll pay the premium, especially if you're close to those areas, they'll pay the premium of that close.
So not the stereotype then, but and being someone from the western suburbs, I'm allowed to talk like this. So you drive the streets and go, okay, mattress against a power pole, shopping trolley, Commodore out the front with no wheels. overgrown thing, 10 cars on the thing. And then the next street is like,
clean.
It's not like that.
Yeah.
You go, oh, hang on a second. This looks like a delineating line, right? That's the ground truth, right? Like you got to get that. Then you get to the local shops and you look at the local sort of strip malls and see what's going on, what sort of things. When you start seeing a dog grooming shop, you just go, hang on a second, something's happening here, right? That's one of the key things of gentrification is when you start seeing espresso shops and dog grooming shops.
Man,
I'm stereotyping here. It's a bit of fun, to be fair. But
man,
this is it.
That's what we do. It's a cool thing because like I always used to do this back in the day. I'd rock up. Probably won't go too, I guess, in depth into how exactly I used to do this, but essentially the short version of it is you'd stay at a local motel, have a chat to the 60, 70-year-old lady behind the counter. Where are the goods? Where are the bads? And then you go drive it, and then literally, mate, I used to have the red highlighter for the dodgies, and I'd literally mark out the streets, and I knew them. I literally knew I would go through these areas, and this is what I train my guys to do as well. We go through them, you learn them like the back of your hands. And then especially as you start operating there, you really learn these things like the back of your hand. So people say a street, you know exactly where it is in the suburb, you know where it's close to, where it's away from, all these sorts of things. And yeah, man, understanding markets from that perspective, I don't see anyone doing it, you know.
You've got to immerse yourself in it. You've got to live the area for a little while, 100%, right? Get out and have a look around. A lot of people are uncomfortable with it, right? They go, I love it. Yeah.
I'll park up there at midnight, man. I want to see what's going on. Had a few close calls.
Yeah. But this is the logic being, don't want to buy, in places. This is probably the debate for more working class blue collar neighbourhoods, which I know you quite operate within. You got to get nitty and gritty with it, right? You got to spend a time out there and actually.
And sometimes, mate, something will stack up from all other perspectives, and then we'll go there and we'll get in the ground. I'll go, nah, this suburb's like no good. Yeah. We're not going to touch this suburb. And sometimes that happens, but you don't know unless you go out there and you get in the ground, because all the agents just want to sell it to you because they're like, it's great, mate, boom, and all the rest of stuff. And sometimes it's an absolute shithole. So getting on there and then learning it from that perspective, mate, it's a game changer.
Yeah, we've got to remember also this is a podcast for property investors, so we're talking about property investment, right? And more affordable corridors. But most of Australia, inverted commas, is affordable.
Yeah.
And this is probably something I want to dispel really quickly, right? Let's talk Sydney for a moment, right? Whether it's let's talk investing 10 years ago, right? I think I'm probably going to get this number wrong. Like a fifth of Australia lives in the western suburbs of Sydney. Something like that, right? And if you pretty much go from it's probably not. Let's go from Windsor Road.
Okay.
So the border between Borkham Hills and Blacktown.
Yep.
And just go out to the mountains and go as far down as Campbelltown, right?
Okay. Yeah.
That's the western suburbs of Sydney, and probably in as far as, let's call it
You coming to Para?
Yeah. I'd probably go as far as Lidcombe.
Okay.
Anywhere from Lidcombe out, right? Yep. From the football stadium. Let's call the footy stadium out. That's the western suburbs of Sydney, right? There's a lot of affordable.
Very accurate map there, guys.
I know you like that. So, mate, this is where a lot of people live, right? A lot of people live. That's where 100%. That's where Australia, places like that, and you have the equivalent in Melbourne, you have the equivalent in Brisbane and stuff.
My accountant, just quick fact on that, my accountant told me there's more small business ABNs in that part of Australia than the rest of Australia combined in Western Sydney.
Thank you, because that's the heartbeat of the nation. Places like that. Yeah. And talk about small business. Small businesses, SMEs in Australia, employ 70-something% of all Australians,
100%.
Right? That's the heartbeat of the nation. These are the punters who are probably paying more tax than everyone else, right?
True.
They're out there grafting, they're getting it done, they're building businesses, they're raising families, they're creating businesses, they're investing in property, they're creating wealth, right? This is Australia, right? It's sort of affordable. You know what I mean?
Yeah.
That's the norm. It's not.
Affordability is all relative.
It's all relative.
Yeah.
It's all relative.
It's all relative to
and you
what
have the
people
same
are making.
pockets all over. Real estate in Australia, isn't Mossman or it's not Vaucluse, That's a part of the real estate market, and people invest in those areas. That's great. I invest in areas like that. That's brilliant. I also invest in other areas where it's more affordable. I've got a balanced portfolio, right?
You go from one full extreme units in Mount Druitt to bloody Vaucluse mansions.
Whatever, I don't have a Vaucluse mansion, by the way. I'm more of a north of the harbour type of guy.
Okay.
But don't bundle me up with those eastern suburbs snobs. But that's not weird. That's Australia.
Yeah.
And you have Ipswich. That's Australia. That's the heartbeat of the nation, right?
100%.
Stuff like that. It's more people live in places like that than don't.
100%.
So wouldn't that be a sensible place to invest in property if there's more people going to live there?
I think the one way I look at this, right,
Very simple view, but
it is, and like I was kind of saying before, like the relativity in terms of affordability of Western Sydney compared to it. The one thing to note is when an area has had a certain amount of growth, that house price to income ratio falls out of balance,
changes.
right? Yeah. And so when I look at affordability, that's how I assess, like, what are the incomes in this area compared to the house price? Is that sitting at that
hence the
affordable
reason why
ratio?
you're not investing in Sydney at the moment, because it's out of whack, it's out of kilter. And will it change? Probably won't. You know, to all those points I mentioned beforehand, you know, Sydney and Melbourne are going to get more expensive to live, particularly Sydney, because Melbourne can keep growing. Melbourne will be a bigger,
got a lot of green
it'll
space,
be a
Huge.
bigger city than Sydney in time.
Yeah.
I think it's probably not far off it now, but Sydney's pretty condensed, right? You know, Sydney's going to get more expensive. So hence the reason why this will fuel intrastate migration.
Yeah.
That's why Brizzy's been home to a lot of New South Welshmen, New South Wales people. Yeah. And it's just the nature of the beast, right?
Well, the funny, that thing I mentioned earlier was like the highest interstate migration in the last 12 months was WA. Yeah. It outperformed, from a percentage perspective, it was higher than everywhere else. So WA, and then obviously, Brizzy, Queensland as well. So it's very interesting to watch like this kind of play out. I think so I kind of want to talk about this, man, like the next like 3 to 5 years, it's going to be so interesting to watch how this plays out, because we've kind of been on this wild run. Like it always moves in different spots, because you even look at the 10 years between 2003 and 13 that Sydney did nothing and Melbourne did nothing. Brisbane, Adelaide, Perth, Darwin, and a lot of regions, they all doubled in
someone did something
in that time frame in the middle there. So it's mate, there's always somewhere doing something.
So the question to ask, and I'll conclude with this, is that why wouldn't this happen?
Government cuts migration.
Okay.
In my opinion, that is the only thing that stops the housing crisis, the housing shortage, the super boom that's coming in the next few years. That is the only thing. We can't solve the housing deficit. That will not be solved. We can't build enough homes to have enough people, don't have enough material, build prices are too expensive, mortgages are too expensive. There's not enough people there willing to go buy land and build. We're not going to solve it from that. The only way to solve it is to cut migration, which I don't think the government will do, because they want to keep the economy pumping and they want to raise the unemployment rate as well. So
they're stuffed.
So I think as investors, we've got a pretty good couple of years in front of us.
God, it's
But it's like one of the things I'd say is like you got to look at this as opportunity. Like and like you said, very well informed people listening to this show. As this is a lot of opportunity there. You got equity. I'll be pulling it out. I'll be putting it to work and acquiring, trying to select the right locations or utilize something that can help you select the right locations. So you're acquiring things in your portfolio. Yeah, because I honestly believe we're in for a few years of pretty good run here.
Yeah. Okay. Well, there you got it. Big prediction. Sam Gordon.
Super boom.
We'll talk about this in a couple of years' time.
Yeah.
And go,
see if it happened.
Yeah, you got it all wrong. No, like, it sort of makes sense, but you just sit there and just go, yeah, but like, but interest rates going up, like they were supposed to stop all of this. It's what they were trying to do. Yeah, but
mate, the one thing I always pull it back to, like, look at the result you had in Sydney with yours, 200%. I had ones in Sydney that did over 200%. Yeah. It's not an unheard of situation. It's external factors pushing it beyond where it realistically should go. Yeah. That's what creates a super boom. 200%, 200%. I'm only talking 150. Mate, I'm being conservative in the scheme of things.
It's like when you rock up at a surf break and go, how's it go? Should have been here yesterday, right?
Yeah, 100%.
Should have been here yesterday. But
that's the Australian property market right over, isn't it?
You can go back through time and you'll find plenty of that. So, like, who knows? Just, get stuck in.
Yeah.
So,
go for it.
If people like what you're saying and they subscribe to your view.
Yes.
There'll be people that don't, and they go, whatever.
That's fine.
That's fine. I get them on and we have a chat with them. That's really cool. But if people want to chat with you and your team, you're free, available, accessible. I know we're sort of coming to the Chrissy and stuff.
Yeah.
You guys got bandwidth? And
of course, man. Yeah, always, man. Yeah, so like easiest way to reach out to us is www.australianpropertyscout.com.au. We're on all the socials as well, or Instagram and Facebook. Put up.
Isn't your
stories
Instagram just you sort of swanning around? looking fancy these days.
My Instagram, man, I do about 2 posts a year. I never post anything. Couple like when I buy a new car, I put the car
put
up there.
a car out there. So that's your company Instagram, Australian Property Scout. Okay,
that's a company
right.
one. I keep them a little bit separate. But then the other one, as you very nicely mentioned for me before as well, if people do like the way that we operate and the way, the style of investing that we talk about and the way we like to invest as well, easiest way to kind of keep track of us, because I know, mate, you get me on here every few months, but people like to listen a little more often. There's the Scouting Australia podcast as well, and I'd recommend to go over and have a listen and see if you like it.
Of course you would recommend it, but
mate, there's only 2 podcasts I listen to.
Your own?
Yep.
And this one?
No, I do listen. I do enjoy this one, mate. I still like listening to you.
Yeah, it's funny how many people, so many people listen to this.
I know, it's crazy.
I just sit there going, really? Oh, cool.
Do you get people come up to you like the airport and stuff? Surely.
It does sometimes happen.
Surely,
yeah, it sometimes happen. Most people sort of my voice probably more than anything.
Okay.
But people who sort of you do. But I get a real kick out of it. People come on and go, Phil, mate, if I didn't listen to your podcast, I would never have started investing in property. Now I've got this, that, and the other. We're doing well. We're talking about all this. And I go, it's cool.
It is cool, man.
Like, it's really, really cool.
Yeah.
I get a lot of so does the team, right? I get a lot of satisfaction out of it. And to my earlier point, like, there's lots of info out there and good info there, like stuff like yours. But you're in the business of being a buyer's agent. I'm just a journo having a chat to people about property. This is it.
Yeah.
But it's cool. But the important point I'll conclude with this is that you said if you like the way we see things, and you subscribe into that and sort of resonates. I've always been pro buyer's agent, and I've been talking about buyer's agents for a decade, right? Like early doors, and in many ways, I think really socialise the idea of using professionals. And if you think about investing in property as a business, a small business, you talk about, which you should do. If you're in business by yourself, you use an accountant to do your accounts. You use a lawyer to draft your T's and C's for doing business. You use professionals all over the place who are experts, right? So this is about getting the right team together. So, with the same lens, why wouldn't you use a mortgage broker? Why wouldn't you use a buyer's agent?
You use a sales agent on the way out, but you think you have a crack on the way in trying to negotiate with that guy to secure the best deal. Yeah,
it's crazy. Oh, yeah, I'm selling the property. I use an agent, right? Why wouldn't I use a specialist at the front end of it? But
how many are you missing out on as well? Mate, we do over 90% a month off-market deals. Yeah. Like how much of the market are you missing as well?
And this is for another time, right?
Yeah, of course.
If you're buying investment stock off realestate.com or Domain, it's probably gone through a handful of buyer's agents beforehand.
Yeah, 100%.
Before it's ended up there.
Yeah.
So, it's like a Chinook salmon, right? It's, was it the fish that John West rejects, right? They go, they get all the best stuff first and then that's what's left over. It's still good, but
it's been passed on.
But it's been passed on, right? So
maybe it's not still good.
So maybe
I haven't smelt Chinook salmon yet.
Mate,
let's go
check that Chinook salmon. Go look at that. But the point is, using a professional and the buyer's agent is good. You got to like them. You got to. If you don't like your buyer's agent, it's the wrong buyer's agent.
You're going to struggle.
There's people who aren't going to like you the way you guys do it. There's got people that like what you do. So you got to be comfortable with your buyer's agent.
Yeah, man, I agree with you completely. And that's why I said, mate. Yeah, people who resonate with us, because that's the thing. People like the 30-year game plan and all the rest. Well, they're comfortable with that. Like, I'm not about that. I try and fast track things, and I want to get a great result quickly, not at the risk, but in an intelligent way, in a sophisticated way of doing it, a strategic way of doing it as well. So,
mate, that's the way you do it.
It's just a different way.
I don't have an opinion on it. It's not my job to.
You're just a journalist, right?
I'm just a journalist.
From Western Sydney.
Just a journo, still struggling.
I doubt that very much.
Still struggling. Trying to do one podcast at a time. One podcast. But Sam Gordon, Australian Property Scout, go and check these guys out. I'll probably Google Australian Property Scout. You'll find him.
That's it.
And pick his brain. I don't know how they do stuff. What do people just have a chat and then you work out whether or not you're going to do stuff?
Yeah, we have guys do. We have like discovery strategists these days as well, who kind of run through everything, make sure essentially like we can help people as well, and then they come through with the strategies after that. So
okay, cool. All right, there's a lot of detail. You guys just work it out. But
book a call, have a chat.
All right, there you go.
Start the journey.
Nice one, and remember to listen to the second best podcast in Australia. Probably Scouting Australia. Okay.
That's it.
All right, good. Sam Gordon, thanks for coming in, mate.
Phil,
appreciate your time. It's always a pleasure to know you've flown down from Queensland to come and say good day. Much better doing it in person. Thanks for tuning in, everyone. Remember to go and check out Smart Property Investment. smartproperty.com.au, social media, Smart Property HQ. You follow me on, I'm on LinkedIn. I don't know how much stuff I post, but
you said you got like 100,000 followers.
There's not 100,000. There's a lot there.
There's a lot
there for some reason. Anyway, thanks for tuning in. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Do you need help planning your next event? With over 15 years of experience, Captivate Events is the expert in event planning. Our dedicated team ensures every detail is meticulously handled. Whether it's a gala dinner, exhibition, conference or study tour, we've got you covered. We'll be there every step of the way, from conceptualisation to flawless execution, to ensure your event is a seamless experience, minimising the time and stress involved in planning. Make your next event one to remember. Visit www.captivateevents.com.au or call 02 88 66 2440 and find out how we can captivate your audience.